Hi guys, good evening. I hope you have enjoyed our last session. Today we are going to go with the day 2 session of the cryptocurrency intraday trading internship. Okay, so those who have attended the last session, can anyone give me a notation like what did we understand in the last class so that we will give you an overview? Okay, trading versus investing. Good. So first topic we understood about trading versus investing. So we understood this topic that the trading is basically what? A short-term thing, and investing is what? A long-term thing. The whole motto of the trading and investing is the same, making some profits. Okay, but however, the time frame in the investing and trading is a little bit different. Okay, so in trading, what do we use? We use shorter time frames, like even intraday. Sometimes we start and stop the whole trade in just a few minutes or a few hours. While in investing, we use the same for the long term. Okay, we do not we try to hold our position, so the holding period of the same increases. Secondly, we understood about the active and the passive investment, like when you are investing yourself, when you're using your own knowledge and analyzing your own time, then it is known as active investment. Okay, however, if somebody, because of some knowledge, because of lack of knowledge or time, you're not able to invest yourself, right? So what do you do in that case? You use some investment intermediary, whereby you give your money to some other person, or you basically you appoint a manager for your money. Okay, so those are known as the investment managers, and that method of investing is known as the passive investment. Another thing, we understood the difference between the fundamental analysis and the technical analysis. So the fundamental analysis is study of what? The external factors which affect the price of the security. So let's say when we are talking about Bitcoin, recently you might have heard the news that the Elon Musk is selling all of his Bitcoins. How many of you people have heard this news that the Tesla had actually liquidated 75% of the Bitcoin in the market, right? So tell me, is this news a technical or a fundamental reason? And will the price of the Bitcoin will affect out of this news or not? Okay, it's an external factor, and that is why it is covered under the fundamental analysis. Because of this news, many crypto holders are doing what? Are becoming fearful, right? And they're expecting that the price of the Bitcoin will decrease in the coming future. Can you understand how I'm connecting the points? Because one of the Elon Musk is one of the biggest whale that holds a large number of Bitcoins. Okay, he was holding more than around $2 billion Bitcoins. So when there is a huge whale and they start liquidating, so what happens in the end is the market becomes fearful, the holders and the investors of the Bitcoin becomes fearful. Okay, but then we also talked about what? We also talked about the technical reasons, technical analysis. What happens is the fundamental analysis of any security or a coin gives us an understanding which coin we should invest in, right? Similarly, if we are dealing in the equity market, what the fundamental analysis is solving us, we try to establish a connectivity, or we try to establish the limited number of companies that we are going to invest in, right? For example, Reliance, for example, any blue chip company, let's say TCS. Okay, so when we are talking about the stock market, what we are doing is that we are taking some fundamentally strong companies to invest our money for the long term, right? But the technical analysis, what does the technical analysis do for us? Come on, people, everyone answer, those who have attended the last session. What is the technical analysis and what purpose does it solve? Can anyone tell me? Yes. So the technical analysis tells us which is the right time to buy. There are so many fundamentally strong securities in the market, right? There are more than 100 of fundamental strong securities, but not every security or not every coin is basically doing what? Is ready to be buy. What? Sometimes the price of the same, let's say Ethereum, right now, Ethereum or Bitcoin, in the recent cases, the market was in bearish sentiment, right? When the market is in bearish sentiment, it becomes very much difficult for us to invest in. So when we will start investing, when with the technical analysis, I'll be able to know that yes, the price is showing me some bullish momentum, the bullish sentiment, right? Only then I'm going to invest and buy the securities. When my expectation as a buyer is that the price of this coin or this Bitcoin or Ethereum is going to increase in the future, yes, only then we are going to buy. So since the first step of investing or trading is to have a watch list. Okay, so what does this watch list means? That means since you know that there are more than 20,000 coins that are available in the market to invest in, but not all coins are good to invest in, right? There are some shit coins as well. Then there are some fake coins which are making losses on a perpetual basis. So what do we do? Out of those 20,000 coins, we try to first establish a limited number of coins that we are going to analyze technically. Because once we understand what is a fundamental strong security, only then we are going to invest our money in the fundamental strong security. Once the fundamental analysis is based on and we create a watch list, let's say 10 to 15 points, we put in our watch list. Okay. So we will be going through all of this. How do we analyze what are the fundamental technical security, fundamentally strong securities that you can put your watch list in? I will show you my watch list as well. Okay. What are the coins that I use for investing and trading as well? Secondly, once you establish this, limited number of watch lists, okay, because see, you have a limited time, you have a limited experience. So in that limited time, you are not able to analyze the movements of the price, basically with the technical analysis of all the 20,000 securities or all the 20,000 coins. So we do need to do first is to actually have a limited watch list, okay, so that we can invest our maximum time in these within securities and have a great opportunity and find a good opportunity to buy or sell. Right. So first step, we get clear that yes, first we have to create a watch list. And after that, we will start with the technical analysis. That is basically the study of price and volume. So we will be covering all of these concepts in the coming sessions as well. So this was just a small recapitulation of what we have understood in the first session. So let's move on to the next session. Today, we are going to cover up the basics of crypto market. Okay. So many people were asking me what really are the cryptocurrencies. You have heard cryptocurrencies so many times, but do you really understand what is a cryptocurrency? How does it work? What is the platform that the cryptocurrency is running on? What is blockchain? What is crypto mining? Okay, so these are the basic concepts that we are going to cover in the today's session. Please be attentive in such things, because once you understand the basics, only then you will be able to identify the fundamental strong securities. If you are not clear with the basics, you won't be able to identify which are fundamental strong securities and which are not fundamental strong securities. Okay, so it's very, very important for you to understand the basics of the crypto market. How is the crypto market working? What is blockchain? What is mining? And how does this stuff all work in the today's world? So basically, if I ask you what are cryptocurrencies as a layman, if you will, Wikipedia or something, you will Google search, it will be written like something, a cryptocurrency or a digital or a virtual currency that is secured by cryptography, which makes it nearly impossible to counterfeit or double spend. So basically, what you need to understand first, that cryptocurrencies are nothing but the currencies. Currencies like what? INR, right? USD, which is dollar. Okay, another is yen. So these are what? These are currencies. What do we do with the currencies? We try to transact. Okay, we purchase and sell services and goods with the help of these currencies. So these currencies are what? Basically, the currency acts as a medium of exchange. Okay, these currencies are what? The currencies act as a medium of exchange for the goods and services. So even if you want any service, let's say you want to go to salon, or you want to have some vegetables, you want to buy some vegetables, all of this can happen with the help of a medium of exchange. So does anyone know about the barter system? What is barter system, and how our ancient people started working on the barter system? Okay, so goods and exchange of goods. Okay, so let's say you wanted some shoes. Okay, and you need to find a shoe seller, and then you find the shoe seller, and this shoe seller, let's say X person, needs some wheat. Okay, needs some wheat for the food. So what do these people do in the ancient times? That they used to exchange the goods with each other. So the shoe seller will give you the shoes and you can exchange with the help of wheat. But then there were so many issues that were coming in the barter system, and then we had to come up with a simpler medium of exchange. And that is when the first time gold came. Okay, when the precious metals came. So you understand that in the ancient times, we used to have gold and other precious metals for the exchange of these goods and services. But then comes the era of the currencies, paper currencies. After gold, there was a limited supply of the gold. So what does the national banks did was that to convert the gold into paper currency. So then the people started with this paper currency system. Every country has its own currency. Okay, and they were able to exchange the goods and services based on those currencies or currency notes. Then came a digital era. Okay, obviously there is always an evolution. Since you know that 20 years back or 25 years back, nobody has a mobile phone in their hand. But right now, what we are doing, we are enjoying the touch screen, we are enjoying the Android phones, right? But they were not available in the market 20 years back or 25 years back. They were touchpad phones, or they were satellite phones, which are not available to the normal public. They were only landlines. So there is always an evolution that is, coming in any industry. So another evolution that comes in the financial industry was the digital currency. Okay, so the era where there was an evolution of what? There was an evolution of this the currency market. The paper currencies were digitalized because of a lot of other problems that were coming with the currencies things. So there was an introduction of first time wallets, okay, digital currency wallets like Paytm, okay, like phone pay. There are so many wallets that came into the market. There were virtual transactions happening all over the world with the help of debit cards and credit cards. So when you swipe when you used to purchase something with the help of let's say you went to a showroom, okay, to buy an iPhone, okay, and to buy that iPhone, what do you used to do? First you need to give some currency, right? But in the evolution, you just swiped your what, a debit card or a credit card, right? So do you really think that there was an exchange of a paper currency in this thing? When you used to swipe what, credit card or debit card, is there any real exchange of the currency? Basically, you can say a paper currency. Is there any exchange of the paper currency? No. So this was just a digital transaction, right? This was just a digital transaction that used to happen. And these transactions were actually made simplified with the help of new advanced technology. This Visa and MasterCard, what are these? These are satellite companies which are able to give you a proper platform, okay, for the banks and the shopkeepers and the other sellers as well, so that they can enjoy the benefits of these virtual transactions. This was just exchange of numbers. So how does this work? That you have a bank account, right? And the seller also have a bank account, and the numbers in your bank account gets deducted and the numbers in the bank account of the seller gets increased. So this is the whole, this is the whole, you can say, cycle of how the currencies work, how the digital currencies work. So then came, when we give it a proper meaning, then came a digital currency with a proper shape and meaning. But it was so simple to use. It is so vital. Okay, this adventure, this advent of this technology was very vital. Okay, understand, if it was not going to happen 10 years before, it is going to happen 10 years after. But this is something which is needed. So let's say I want to send some money, some money to US, to my brother in US, or let's say any client in US. There is so many impossibilities that you have to go through. You have to go to your bank, then you have to get a receipt for the dollars, or you have to exchange some dollars against it. Then you have to transact and send those dollars to US. Then that person do what? He will go to his own bank account and then he will get the money. But on this whole thing, there were so many charges levied. Okay, there were so many charges levied on the same transaction. So let's say if I am receiving 100 rupees, okay, from a US client, I am only receiving around about, you can say around 87 rupees I am receiving right now. So I have some international students as well. So these are the problems that we are incurring in the life, okay, on an everyday basis. So out of that 100 rupee value, we are only getting 87, and not because of some taxes. See, understand, these are not because of some taxes, because this is a what? This is a transaction charge, right? So there were so many problems. There are so many problems which are, which were happening all over the world. But now what is happening? This advent of what? A digital currency has made it so simple. A USDT or a Bitcoin in India, right, is same a BTC in what? A China. So are you understanding the whole cycle and the problems that actually were, solved by the advent of this cryptocurrencies? So they are nothing. Okay, do not make it a hyper thing. Do not overestimate it. These are nothing but currencies only. But these currencies are in the form of a digital. These are in the digital format. Okay, so you are having a block. You are having a BTC wallet, right? And another guy in US is also having a BTC wallet, right? First of all, it will hardly take some even I'll say 2 to 3 hours to send around $1 million. Okay, if I want to send him $1 million, it will hardly take me 2 to 3 hours to send the same to the Bitcoin wallet of some US guy. So many large transactions can be done within some hours. So understand that there were so many problems that were actually resolved by these currencies. Okay, so we will be understanding the whole concept. We will try to have this transfer of thing. Okay, I'll show you some practical concepts of how can I send some cryptocurrency from one wallet to another. Those are very beginners in this internship. So please don't fear, we will be coming up with a lot of interesting things as well. Okay, but what you need to do by yourself is to stay focused and be regular. Okay, so many cryptocurrencies are decentralized. So decentralized is basically what? That there is no central authority. There is no central authority. Like if we talk about INR, okay, this INR, this whole supply and demand of INR is regulated by what? Regulated by whom? RBI, right? Similarly, if I talk about the US dollar, it is mostly regulated by whom? The Fed government, the Fed Bank, right? So there are so many centralized authorities which are commanding over the supply and demand of these currencies. So on the 8th November 2016, when there was this major factor of Nodebandi, have you ever, like all of you must have experienced this experience, like the Nodebandi thing, when your currency was told to be negligible, right? So many haters of the cryptocurrencies are saying that there are so many problems with the cryptocurrencies. Are there not problems with the virtual, fiat currencies? So if you remember that there is a ongoing war against Russia versus Ukraine, do you really think that the currency of Ukraine has any standing today? If you have bought some Ukraine currency, do you really think that they have any value today? No, they have degraded like to 100% of the value. Nearly 90% of their value have been lost. There was a refugee, there was an article I was reading. There was a refugee from the Ukraine, okay, who actually eloped to Europe, okay, after this war happened, and he was a millionaire over there. While he reached in Europe, all of his credit cards and debit cards were nullified. All of his life savings was told to him that it cost him nothing. Okay, these are zero for them. But what he did was that he had saved some bitcoins, and because of these bitcoins, he was able to buy a new home in Europe. He was able to step up on his living again. See, understand, even if as a refugee from a war country and establishing your network and other thing, lifestyle to some other country, it is next to impossible. There were so many problems with him. But in that article, he specified that because I invested in some bitcoins, they were of the same value over there. And because of him, he was able to survive and get back on his feet. Okay, so these are decentralized, means that there is no central authority over bitcoins. There is no person, there is no single institution telling us whether the bitcoin should be, whether the supply of the bitcoin should go down or whether the supply should go up. So it is all based on blockchain technology. We will understand whole concept of the blockchain in the coming slides. So please don't hesitate when the word comes like blockchain and something. We will understand what is the blockchain technology. It's very simple. Okay, and which is nothing a distributed ledger enforced by the disparate network of the computers, which are immutable and mainly scarce in nature. Okay, I'll try to convert it in a very simple thing so that you can understand what is the blockchain technology. So you have to wait for two to three more slides. Okay, so understand that there are more than 1,600. I think there are more than 20,000 cryptocurrency, 2,000 cryptocurrencies that have been coming into the market. Okay, so there are so many cryptocurrencies that are available in the market today, and you can invest in any one of them. Okay, you just need to know where to purchase from them. And these currencies like BTC, ETHERUM, okay, Litecoin you might have heard about, and FLM coin, right? So these are the very famous currencies that you might have already heard about. Okay, so we will be understanding how do we measure them fundamentally, and how do we will start trading on an intraday basis as well. Because I told you, we will not go much into fundamentals. This is an intraday trading workshop, but we have to know about a little bit about the fundamentals so that your understanding is clear. Okay, so we will understand a small thing about the pros of crypto. Okay, what are the things that makes the advantage of the crypto? Okay, what are the advantages of crypto? First of all, it is decentralized. As I told you that there is no central authority. It is people's money, for the people, by the people, to the people, right? So you yourself, all people are holding all this Bitcoin, right? This is the 21 million supply of the Bitcoin. This is very limited Bitcoin. It will never increase. Okay, and those who are holding it are actually doing what? They are either selling it or buying it. Okay, so there is no single institution, okay, like which is actually holding the true value. So everyone is a buyer and everyone is a seller. It's easy to use. I told you, like, it's wallet to wallet. Let's say I want to do some transaction like to some guy in US. Let's say his name is Rohit, right? So it's like wallet to wallet. I have my BTC wallet. Okay, he has his BTC wallet. All I need to do is to basically transfer him to his address. So he will be giving me his address of the BTC wallet. It will be a 17 to 21 digit wallet address, and that wallet is very much unique. Okay, it's like your Aadhaar number. Everyone has a unique Aadhaar number, right? So the BTC wallet also have a unique ID associated with them. And when I will be sending to that address, this person only will receive the Bitcoin and no other person will be an intermediary. Usually what happens is, like, if I want to send you some money, let's say I'm over here, okay, and let's say Rohit is over here in India. What I need to do to send in money is I have to go to my bank, either online or either, with reality, or I can use the virtual services as well. And I have to contact the Rohit bank as well. Rohit has maybe, let's say he's a bank account in a different account, let's say PNB, and I'm using SDFC. Okay. So these are the two bank accounts. These are so many intermediaries that are getting involved. So if I want to send him even 100 rupees, even if I want to send him 100 rupees, first I need to connect to my bank. I would have to request the bank to send the bank account of Rohit, okay, to send him 100 rupees from my bank account. And then the bank will do this transaction. This bank will confirm the transaction, and this bank will then inform the Rohit that you have received 100 rupees. See, it is so much tedious to even listen to this all stuff, right? So understand what is the whole tedious process. And understand how it is very simple when you are sending BTC to someone else. There is no intermediary in between. It's just wallet to wallet. Are you understanding what's the gravity of the situation? There is no intermediary in between. There is just your BTC wallet and his BTC wallet. Obviously, there is an inclusion of miners which will understand who confirm the transaction. But since they have also no role in saying that, yes, you cannot send BTC to, the other person. Can my bank deny that I cannot send my money to some other person? Tell me. Yes or no? Can my bank deny it that I cannot send or I cannot receive any money from some other person? Yes, they can. Have you not heard about when the messages come around that you have let's say that, your OTP is wrong or some other reason they will give you, like your check bounce, okay, because you were not dating it properly or something, any reason. But they have the authority to tell you, no, you cannot send it. Okay, your limit is achieved or something like that. But there is no limit in the Bitcoin. You can receive $1 billion in Bitcoin today, right? And it won't affect anyone. It is standard all over the world. If I have to send some person in another country, then I have to use his currency. I have to send him his currency. But BTC in India is equal to BTC in US or in China, right? So it is standard all over the world. It is a wallet to wallet transaction, no intermediary, as I just explained to you. There is no intermediary in between. It's just your wallet and his wallet or some other person's wallet. It's a very, very low cost transfer. Okay, you can do around a transaction of, right, let's say 6 crore rupees. You want to send someone 6 crore rupees to some other person. Do you know how much bank charges would you have to incur to send these 6 crore rupees? Can anyone guess an idea? There is if you have done any NEFT or something, there is a rupees 2 or rupees 5 per lakh transaction, or per 20, something like this. So some banks charge 2 rupees, 5 rupees, or some banks even charge 25 rupees for per lakh transaction. Can you estimate what is the transaction charge on this 6 crore transfer? A lot. Okay. And can you tell me what is the minimum charges that I have to pay on a transfer of 6 crore rupees if I'm sending the same on through some cryptocurrencies? I'm not saying specifically Bitcoin, but through some other cryptocurrencies. I want to send some person 6 crore rupees. It's equivalent to nil. Even if I'll just use a Tether. So there are so many platforms that I can use to do that. Okay, the maximum they will charge is $1. That is 80 rupees for the whole 6 crore rupees transaction. Are you understanding the gravity? Why this cryptocurrency is taking over the world, and why governments all over the world are very much insecure? Okay, right now they are feeling insecure, and that is why they are trying to gravitate the situation with the help of their taxes and other federal mechanism and the monetary mechanism they have. Right? It is a total full privacy. Nobody will ever know that whose Bitcoin wallet transacted to who Bitcoin wallet. So the key that you will be provided, or let's say even the Aadhaar addresses are not secure till today, right? But these wallet addresses are so secured that no hacker in this world can till now tell us or tell the person whose wallet address is this. So if you're sending money to, let's say America, Africa, anywhere in the world, nobody can tell that who that wallet address belongs to. right? Decoding is possible. It's not like you cannot find the whole. If you are using your private key, if you're giving your private key, Naresh, then only it's possible. If you are giving a public key or private key, there's a huge difference between these two. Okay, we will be covering in the same. But if you're giving a public key, then it might be possible. If you're giving a private key, it won't be possible. Okay, so your wallet number changes every time. It is also an option. Every other minute, you can refresh your wallet number. You can generate a whole new 21-digit number, which will be a totally unique address to your wallet. And no other person can actually describe. Let's say you have a 21-digit number ending with 21, initially. And then right now, if I will refresh and if I want to generate a new key, then it will be something other new 21 digits, let's say 42. So that is why it is this is one of the pros of the Bitcoin or cryptocurrency. Okay, so I hope this is very much clear to you. So let's move on to the next slide, which is the cons of crypto. Okay, this is not something like there is no downside. There is always a downside to everything. Okay, there is always a downside to everything. So what is the downside in the cryptocurrencies? Understand this thing, that the crypto markets right now are so volatile, their price changes more frequently than the pulse of your heartbeat. It is very, very common. In January, we were understanding that Bitcoin was around $60,000. And from $60,000 today, can you tell me what is the today's price for BTC? Anyone? In dollar, what is the today's price in BTC? 23,467. So the thing that you might have purchased, or the currency which was valuing around $60,000 in the only January this year. I'm not even talking about 10 years back or 5 years back. I'm talking about the January this year. The value is right now at 23,000. So understand that there is no always always white cloud. There are some gray clouds with the crypto market as well. And because of this, many people have suffered millions and trillions of dollars of losses. So it loses the function of becoming the store of value. Okay, so because this is so much volatile, it loses the function of the store of value. Your parents might have done what? Stored some gold, right, in their savings account or something like this, because gold has what? Gold has a normal price value. Okay, it's around 45 to 50,000. It goes around like this. It cannot go like 22,000 or 10,000, right? So it is doing what? It is solving the purpose of store of value. But crypto, you cannot say that if I buy crypto today, it will be the same in 6 months or after 12 months. You will have to suffer that volatility of the prices. Okay, and these are the two reasons why the crypto markets is not favorable at such times. Because there is so much volatility, because the price changes are so much huge that people have lost even their homes in this cryptocurrency market. And you might have also there are some people in the internship as well who have lost a lot of dollars in the crypto as well. Right. So understand that you will have to manage the risk. See, this is the risk. The returns, you understood that yes, it is it is good. It is so much good. You can transfer so much cryptocurrency without any cost and other stuff. But understand there is always a risk associated with a lot of things. Right. So what we need to understand that we have to mitigate this risk. We have to take care. We have to accept that this is something which is happening in the market. And that's why we have to step it very, very careful. Step on this market very, very careful. So there's a small difference between the fiat currency. The fiat currency is the one you're using, which is the USG INR. Okay, so this is a small slide which you can think that yes, there are some frauds being happening in the transaction purposes. Someone tells you to share their OTP, and then your whole bank account vanishes. Right? You have to trust someone to hold your money. That is, you have to go to your bank and then deposit your money. But how safe is your money? My question is, how safe is your money? Do you really think that banks have you should trust 100% on your banks? Have you not heard about the PNB Bank scam and the SBI Bank scam and the Punjab and National Bank? This was one bank in the Maharashtra which got diluted, and all of the depositors lost all of their savings, the life savings. Right? So such things happen. And crypto, the thing is, it is scarce, always limited. You cannot print more money. The one thing that happens with the fiat is that government can print as much money as they want. Okay, this is one of the case study that you should go through in the South Africa. What happened is one of the countries actually started printing more money, because there was so much poor population over there. People, government started printing money and putting in their savings account. what happened in that country, that the inflation, because there was so much free money available with the people, they started shopping and buying services. And because of that, what happened is there was a situation of hyperinflation. So just write down your tomorrow's assignment is that you have to go through this case study. Which country is it? Okay, and how does this hyperinflation affected it? Okay, I'll try to share you the article from my side as well. Okay, so these are the problems that happen with when the things are decentralized and when the things are not decentralized. Okay, this is the total share of the cryptocurrency market, how much it has grown. So these are the companies, these are big companies, and this is a gold cap. So $8.2 trillion is the gold market. Okay, then comes the physical money, which is $31 trillion. Around stock markets all over the world is $66.8 trillion. But all money in the crypto. This is a old chart. So right now the value has decreased a lot. But this was the situation in the January, when all money in the crypto that was happening in the crypto markets was booming on. Okay, it reached to a $43 billion. Then it reached to a lot of end trillion values. Okay, so understand the whole concept of the blockchain. How does the blockchain work? So what is basically blockchain? If I try to make you a small diagram, what is happening? Okay, it's a distributed database. So let's say 1 transaction, 2 transactions, 3 transactions, 4 transactions, 5 transactions. Okay, now this becomes a block. Okay, this is now a block. Then again, 1 transaction, 2nd transaction, 3rd transaction, 4th transaction, 5th transaction, this becomes a block. This is how the blocks are being made in the transactions. Okay, these blocks are made on the form of transactions. See, when banks store the data, understand, when banks store the data, they have a full ledger. Okay, if you will go down in the statement of your own account, you will have the full ledger, right? But the blockchain, this certain technology, how does this work is, people will get a block. Okay, let's say there are 5 transactions in a block. First, these 5 transactions will be taken out. Okay, first this block will be processed, and then the next block will be processed, and then next block will be processed and stored. Okay, so this is the whole idea of a blockchain. You don't have to go deep in the blockchain because we are going to go for intraday, trading. But understand this is a blockchain. How is it going on? It's a distributed database. But understand when this block, okay, why it is different from the bank's block. This block is, let's say, with some person A. Okay, A is a miner who confirms the transaction. We will move on to the next line and see how it confirms the transaction. So this block might be with A, and this second block, okay, or the second transaction happening on the same day might be with some other person C. So let me give you an example. How does this work? Okay, so let's say I'm Paras and I want to send some Bitcoin to some other person. Okay, some other person in US. Okay, let's say Rohit or any other name. Okay, now understand, I send him 1 BTC. I send him 1 BTC to his wallet address. So I will, what do I need to do? I will open up my wallet and will put on his address of 21 digits or 17 digits, depending upon what is the Bitcoin address. So I'll use this address, okay, in my sender detail. I will just send it. Now what is happening is, once I send it, now it will go to a miner. Okay, there is a miner in this transaction. There is a miner in this transaction. Let's say X person who has no authority over this transaction. Understand, he has no authority. With the help of his computer, he's just understanding and confirming, yes, the address that you put and the details you have put, you have sent it to the right address. And he confirms the transaction that, yes, this wallet address, that is my wallet address, has sent 1 BTC to this wallet address. That is his whole work. Okay, after 2 confirmation or 3 confirmations, okay, this Bitcoin will be showing, credited in his wallet. Okay, so understand, when this transaction happens, what the transaction will do. Let's say there were 10 transactions. Okay, the miner has to confirm these transactions and this become a block. This is going to miner X. But then again, what will happen after these 10 transactions, another block will be made, which might or might not go to X. It might go to some other miner. But this all will be what? This all will be chained with the help of some numbers, that this is a transaction number, this is the transaction ID. Like if you have sent some UPI to some other person, you always get a transaction ID, yes. Similarly, you also get a transaction ID in the crypto wallet as well. But this transaction ID has been verified in which block, by which miner, you will never know. See, your UPI ID transaction will be confirmed by which? By whom? Your own bank, let's say PNB, because you're sending money from your PNB, right? So the PNB has to take care of this transaction and confirm the transaction, right? But in this case, this transaction will be part of some block, and this block will be confirmed by which miner, who's like, it can be confirmed by any miner. Okay, there is no specific person who will be confirming this transaction, but yes, there will be a unique transaction number. There will be a unique transaction number towards this transaction, and this transaction will be uploaded on the public chain. Okay, this transaction will be uploaded. If you want to confirm if you have received money or this transaction happened or not, there is a public domain. Okay, I'll show you all of this practical work in the next session. I'll try to, I'll open all the websites which you can confirm these transactions. I hope that this will give you a better understanding. But understand right now, let's understand this conceptually. In the next session, I will try to get these things on websites. How do you check the public thing? So there is a website where you can do what? You can put up your transaction ID, and you will see this wallet address has sent this much Bitcoins to this wallet address and has been confirmed or not. Either it will be saying pending or it will be confirmed. But this transaction will be seen by all of the world. All over the world, anyone can see that transaction. Your bank account transaction can only be accessed by you, your bank, and the person sending it. But this type of information is public at all. But what is not public is the wallet number. Whose wallet number this person belongs to, it doesn't know. Are you clear with this thing? What I have told you till yet? Yeah, you will get the idea of the volume as well as the confirmation. Understand, there is a pending thing and there's a confirmation thing. Let's say an X person has told you that I have sent you 3 Bitcoins. Okay, but it is not showing in your wallet. It is not showing in your wallet. Let's say Y%. So what you will do, you will ask him what? A transaction ID. And you will go on the public blockchain and you will put down this ID number on the search box. And this, if this is a genuine transaction, this will be showed over here. Will also tell you the status, okay, status of this transaction, whether it is pending or whether it is confirmed. If it is pending, that means a miner is using his computer to confirm this transaction. And if it is still, if it has confirmed, if the miner has done it, then the transaction is confirmed, and then you will see the credit of the Bitcoins in your own. Okay, I hope this is very much clear to you. We will not, you do not have to go in deep to do some intraday trading. No, these are just concepts to understand your basic things about the blockchain and how the cryptocurrencies are working. Okay, obviously we'll be going on with the technical sessions, how the technical analysis is done, but have a gesture of understanding so that you are able to understand what the cryptocurrency is. If you're a cryptocurrency trader and you do not know what is a blockchain, how does the blockchain work, so anyone can fool you now. So miner is nothing, see, miner is doing nothing but confirming this transaction that yes, this is a genuine transaction. This is not a transaction. See, what hackers do is also try to make a duplicate address. Let's say they try to make a duplicate 21-digit address, right? So this miner will get an alert that this is not a genuine address. Someone is trying to defraud it, and he will not confirm the transaction. Understood? There's a very, very good role of miners. Miner earns with the help of the cost. So when you will sending in 1 BTC to another person, let's say Y, X sent 1 BTC to another person Y, there'll be a small fee that will be cut from your wallet, and this person will receive around 0.99 or 0.9998 something BTC. Okay, and the thing that will be deducted will be shared by the miners as a confirmation fee. Understood, Darshan? How the miners earns? Okay. So let's move on to the next slide. I hope the understanding of the blockchain has been clear to you till now. So this is the whole thing that you can confirm the transaction. In crypto networks, mining is a validation of the transaction. For this effort, successful miners obtain new cryptocurrencies as a reward. So basically what they will get a miner, that transaction fee that you will be deducted from your wallet, that will be a reward to those miners. The reward decreases transaction fees by creating a complementary incentive to contribute to the processing power. So jo aapki fees kaati gayi hai, the fees that has been deducted from your wallet is not because there is a transaction fee. It is because someone has to confirm that transaction and it should be given a reward, right? So that is the reward to other person. Bitcoin or crypto transaction are aggregated into blocks. So first, what I told you, like they will be aggregated in blocks. Let's say 5 transactions are within this block, and that are added to the database called the blockchain. So blockchain.org, or I'll send you the whole website. What you will see is that current transactions that are happening all over the world. So why is it happening? Because the blocks are adding. Okay, every minute there are zillions of transactions. Every day, a zillions of transactions happens in the cryptocurrency world. So how these zillions of transactions will be basically, managed? These are managed by the miners and the blocks. So these transactions are first distributed into small blocks. That blocks go to some miner to confirm these transactions, and then your money gets credited. In Bitcoin, there are around 3 confirmations that it has to go through. Okay, 3 confirmation. After these 3 confirmations are done, that means the miner has first it will go to miner 1, it will confirm the address and it will confirm the thing. Second, it will go to another miner, it will confirm the same details, so that even if there is a good hacker or a good person who is trying to defraud the transaction or a crypto blockchain network, it won't be able to do by the second or the third miner. Okay, so there are layers of protection that you are not even imagining. There are so many layers of protection in the cryptocurrencies. Full nodes in the Bitcoin network, maintaining a record of the blockchain and verifying the transactions occurring on it. Bitcoin miners download the entire block of history and assemble the valid transaction into a block. So let's say you want to become a miner. First of all, you need to have a whole farm of computer nodes and high terahashes CPUs. You need a lot of CPUs to confirm those transactions. So whenever you want to become a miner, first the computer will download all the blockchain transactions that has happened till yet. Understand? It will download all the network, all the blockchain transactions that has happened till yet, and then when the first new transaction will come in, okay, only then you will start earning your money. When you will be confirming, because see, understand the working of the CPU. It has to get all the history of the transaction that has already happened. Only then it can process a new transaction. Okay, and that is why, because of this whole new history, understand these are zillions of transactions that has happened in the world. So your CPUs have to do a lot of processing, to obtain this reward. Initially in 2016, I mined a little bit Bitcoins on my own computer based on the same thing. You were able to do so. You just need to become, it's not a very harsh rule. There is no authorization that you cannot become a miner. Just have to plug in. You have to plug into the whole blockchain network. Okay, this blockchain network will give you what? They will give you the whole history of the transaction, first download it into your computer, and then they will start processing the new transactions. No, they don't have to sit anything. See, you don't have to confirm the transaction. Your CPU is doing all of it. You just have to set up that computer. Understand? You have to give that command to the computer. You don't have to screen anything or do anything. But yes, since the computer are running at a very good speed, you have to maintain the temperature. You have to maintain the CPUs. If there is any circuit problem, understand, if there is let's say you downloaded all the stuff and the crypto transactions are going on and there is a short circuit and electricity goes off, you will lose all the rewards that you have accumulated, because when you will restart the computer, it has to download the whole of the history again and then continue to process. So there is a lot of management thing that you have to do with the mining. So if the block of assembled transaction is accepted and verified by the miners, then the miner receives a block. Okay, I hope this whole thing is understood to you. Even if you are not able to understand, do not go in deep. We are not going to use this stuff. This is all only for the knowledge and the practical purposes, how the cryptocurrencies are moving. Obviously, when we will be intraday, we will be using more and more technical analysis. Okay, so type of cryptocurrencies. Now we are going with the cryptocurrencies. Like, what are the 2 types of the cryptocurrencies? One is Bitcoin, and all other coins which are not Bitcoin are the altcoin. Understood? There are only 2 categories in the cryptocurrency world. First is Bitcoin, and all other coins, even if it is ETHERUM or any other coin which is not a Bitcoin, are all known as altcoins. Bitcoin. So we are going with the what? We are going with the fundamental theorems of the Bitcoin. So it is a means of payment or store of value, as it was developed by Satoshi Nakamoto. It's a little bit wrong. It's a Nakamoto. Okay. In 2009. Okay. On the bitcoin.org, you can go on this website and download the white paper. It is the USD of the cryptocurrency, since you know that the USD is the most popular currency that is used by all over the world. Okay. Why is Bitcoin special from others? It is not special. It was the first one. It was the first one. On the basis of the Bitcoin and the blockchain technology, other coins were introduced in the market. Okay, it is the first time that such technology, such decentralized technology was introduced. Okay, biggest and most trusted and used crypto. It is also used as a payment or a store of value. It is deflationary. Huge community hai Bitcoin ki. There are more than millions and millions of users, multi-million users hai Bitcoin. It is extremely secure. I told you about the transaction thing, how it is secure and how cannot anyone defraud with the Bitcoin. And there is, if you want to read more about the Bitcoin, you can download the Bitcoin white paper. You can download the same from this website. Okay, and try to read about Bitcoin. If you want to understand a little bit better, and if you want to go in deep, you can always read the Bitcoin white paper. Understand this white paper. What is this white paper? It is basically nothing but the description of the project. So any cryptocurrency that is coming in the market, any cryptocurrency that is coming into the market, how do you know whether that cryptocurrency, let's say I got up with a coin, okay, I came with a new coin, anyone can actually now make a coin, okay, it's very easy to actually formulate your own coin. So understand, whenever there is a new project, okay, there is a new coin coming into the market, they will always have a white paper. Using this white paper, you can fundamentally understand what is the project, who are the team members, what is this going to solve. So basically every coin understand, every coin solve some problem. Okay, solve some problem. Is the Bitcoin white paper same as any company's white paper in the stock market? See, companies don't have a white paper. They have financials, they have prospectus. Okay, white paper is basically the term used for the cryptocurrencies only. So it was nothing but the description of all the fundamentals that you want to achieve. What technology it is using, what are the processes that are using, what is the solution that this currency is giving, why ETHERUM has come. Okay, why ETHERUM is being defeated, because ETHERUM was used to have a gas fee. If anyone has used ETHERUM, so let's say you have you heard about the NFTs? So we'll not go in detail, but NFTs are nothing but the non-fungible tokens. Okay, these are non-fungible tokens. These are the way of art. We will have a separate workshop on the NFT someday, and I'll try to message you all, invite you all for that workshop. But understand, when the ETHERUM was used in NFT transaction, there was a huge gas fee that we have to pay with the ETHERUM network. The network on which the ETHERUM was established was very much difficult and has a huge gas fee. So let's say I want to spend $1,000, I have to give $200 as the gas fee. So it was 20%. And that is why when the Solana, okay, when the Solana coin came in market, it reduced what? It reduced the gas fee of the ETHERUM. And that is why Solana coin is much more used in the NFT world than the ETHERUM. Initially, it was based on ETHERUM, okay, but then Solana came and that gas fee was vanished. But now, the founder of the ETHERUM has actually come up with some solution where he is trying to reduce the gas fee just only to $2. They will remove the gas fee. Okay, so these are the things that are coming in the future in the market. Okay, we will be going through a lot of websites. Okay, I'll tell you the important websites that I use for getting all this information. Okay, so just stick with it and try to understand the whole concept. Yes, also the white paper will always help you, the new investor, to save you from frauds as well. When you will see that the Squid Games token came in the market, the white paper of that Squid Games were all bullish. Okay, it was just, you can say the Squid Game rushed up because of the Squid Games of the series. And the Squid coin has become popular among those kids, and they started buying it. And what did the founders did? They all dumped their all coins. When they hit the high, it was like $0. Okay, around $0.01 was the price of the Squid Game coin, and it went up to around $31. And once it started reaching around 31, I think it even reached to $100. And what did happen? That once the price was this, all the founders of the Squid Game coin actually dumped up. That means they all sold it, and the coin value is right now $0. So this also happened in the markets. So understand why we are going through these fundamentals is because you should not become part of any scam. Understand what we need to go through to not become a part of the scam. How do we know that this project is genuine? Okay, so these are the processes that you have to follow. All coins that are not Bitcoin are known as what? Alternate coins. These are Sol, Mana coin. Okay, there are so many coins. You can study about the Luna coin as well, how everyone started dumping Luna. Now the founders are doing what? They are coming with a new coin, Luna 2.0. Do you really think it will go on? Do you really think it will go on and have a market in the future? Okay, so everybody is saying no, but understand that people still are encouraging. The founders are actually able to sustain this project, and many people are buying again Luna 2.0. People do not learn from their mistakes. Do not do that mistake. Always learn from your mistakes. So why many of them? So why so many of them? If cryptocurrency in the part of cryptocurrency, Bitcoin has solved all of the nature, then why do we have so many coins? Why do we need for the altcoins? Because these coins have a protocol difference. That means they have a different technology. There are different protocol that they work on. There's a very technology different purposes among them all. As I told you, like ETHERUM. Okay, ETHERUM was working on some different technology platform, and it was charging a gas fee. While Solana came out in the market, and it was working on a different technological platform, and it reduced the gas fee to around nil. They all have a different purpose and use. Every coin, when you will go through, even if you want to understand why there is a mana coin, where there's a different Ethereum coin, always go through their white paper. And you will understand by reading 2 to 3 white papers that they have so many differences. They have protocol differences, they have technological differences, and so many other things that are coming into the market. Okay, so all of you understood like why the Bitcoin white paper or the white paper of any cryptocurrency is important, because they will give you the fundamental analytics of the whole project. If you want to invest, you want to become an early investor in any cryptocurrency, just go through their white paper, understand the whole thing. Even if you're not able to understand the whole white paper, just go on YouTube, and there are so many YouTubers, sharing that white paper, making it in a simple language. So understand what point you have to, focus on. Not even if you're not able to do it, just ask someone else. It's okay, but at least you should know what point you have to focus on when you are doing your investing in crypto. Okay, so Ethereum run on dApps, developed by widely Goel in 2013. ETH is a platform enable users to create their own platform, crypto. So Ethereum was the first crypto, the network that actually, the platform that it created in the Ethereum enabled so many other people to run their own crypto. Okay, and run it on what? ETH blockchain. Allows developers to create a decentralized application, dApps, and enable smart money contracts. Smart contracts, they started enabling, to have the smart contracts, and then creation of tokens. Do you know what a token is? Do you know what is the difference between a coin and token, a cryptocurrency or a token? So many cryptocurrencies are known as token. Why? So if you do not know, do not guess or do not Google right now. This is another assignment question. Okay, tell me the difference between them. Okay, and then we will discuss this. It's a very, very minute difference, but it's very, very important. You should know the difference between the cryptocurrency, the whole coin, and the token. What is the difference between those two? Okay, it was faster time, 15 seconds block time. So the blockchain on which the Bitcoin was developed, it was taking around 2 to 3 years, even days, sometime to confirm the transaction. But Ethereum came in, and it was only a 15-second wait that you will see the Ethereum in your own world. Okay, moving on to the next slides. We will go on these with slides. These are nothing but the simple things that I have collected from their white paper. Okay, you will go through it once when the recording is available. You can go through these points properly, and it's nothing but you will say a small technicals that you are using for the fundamental analysis. Okay, these are the technical things that you are understanding for the fundamental analysis. Okay, so from the next session, we onwards, we are going to go with the technical analysis only. We will be starting to understand which platforms we are going to use for the intraday trading. What is price action? What are the strategies that I can use? What is the watch list I will create? What is the price levels are important? How will we trade? When we will know where we have to short, and when we will know that we have to long from this level. Okay, so I hope that you have enjoyed today's session. I know it was a little bit theoretical. Sometimes you get bored even, but that's a part and parcel of this process. If you have any questions right now, you can ask me. Otherwise, you people, good night, take care. We are done for the day, and we'll continue day after tomorrow for the next session.